A personal loan may look simple, but the real cost is often hidden. What seems affordable today can become expensive over time. Many people focus only on monthly payments and ignore the full picture. If you're not careful, hidden costs can damage your financial stability. Personal loans often come with interest rates that feel manageable at first glance. The monthly payment looks affordable, which creates a sense of comfort, but this is where most people make a mistake. They focus only on the installment and ignore the total repayment amount. Over time, interest increases the actual cost of the loan significantly. The longer the loan duration, the more interest you pay. Even a small difference in interest rate can lead to a large financial impact. Many borrowers underestimate how fast interest accumulates. This creates a gap between expectation and reality. What looks like a small loan becomes expensive over time. Understanding the total cost is more important than the monthly payment. Interest grows quietly, but consistently. What seems easy today becomes heavy tomorrow. Awareness protects you from long-term financial pressure. Most personal loans include processing or service fees that are often ignored. These fees are charged before you even receive the money. This means the actual amount you get is less than the loan amount. However, you still repay the full loan with interest. This increases your effective borrowing cost. Many people do not calculate this difference. They focus only on the approved loan amount. Over time, these upfront fees reduce your financial efficiency. Small percentages may seem minor, but they add up significantly. Hidden charges like documentation or administrative fees also increase cost. Understanding all charges before borrowing is essential. Always compare the amount received with the amount repaid. Transparency helps you make better decisions. Hidden fees turn simple loans into expensive commitments. Missing or delaying payments can quickly increase your loan burden. Late payment fees are added to your balance, increasing the total amount you owe. In some cases, interest rates may also increase after missed payments. This creates additional financial pressure. Many people underestimate the impact of even a single delay. Over time, repeated late payments make the situation worse. Penalties combine with interest, making repayment more difficult. This leads to stress and financial instability. Staying consistent with payments is essential for control. Setting reminders or automation can help avoid delays. Discipline protects you from unnecessary costs. Late payments are avoidable mistakes. Timely action keeps your financial plan stable. Consistency reduces risk and pressure. Longer loan terms may seem attractive because they reduce monthly payments, but this comfort comes with a hidden cost. The longer the loan duration, the more interest accumulates. This increases the total amount you repay significantly. Many people choose long terms without understanding this impact. Lower monthly payments create a false sense of affordability. Over time, you end up paying much more than you borrowed. Shorter terms may feel challenging, but they reduce total cost. Understanding this trade-off is essential for smart borrowing. Monthly comfort should not replace long-term thinking. Total repayment matters more than installment size. Long terms increase financial burden. Smart choices focus on overall cost, not short-term ease. Many lenders offer optional insurance or add-on services with personal loans. These may include protection plans or additional features. They are often presented as helpful or necessary, but in many cases they are optional and increase your total cost. Many borrowers accept these without full understanding. Over time, these extra charges add significantly to your repayment amount. Not all add-ons provide real value. Some are simply additional costs disguised as benefits. Understanding what you are paying for is essential. Avoid unnecessary extras that do not support your needs. Clarity helps you reduce expenses and stay in control. Always review all additional charges carefully. Hidden extras increase financial pressure. Awareness helps you avoid unnecessary costs. Many personal loans include prepayment or early repayment charges. This means if you try to repay your loan before time, you may have to pay a penalty. This reduces your flexibility and discourages early repayment. Many borrowers are unaware of this condition when taking the loan. Over time, this prevents them from saving on interest. Early repayment is usually a smart financial move, but these charges limit that benefit. Understanding prepayment terms before borrowing is important. It allows you to plan better and avoid surprises. Flexibility is an important part of financial control. Restrictions reduce your ability to make smart decisions. Always check if early repayment is allowed without penalties. Hidden conditions can affect your financial freedom. Some personal loans come with variable or changing interest rates. This means your interest rate can increase over time. While the initial rate may seem low, it may not stay the same. This creates uncertainty in your repayment plan. Over time, increasing rates raise your monthly payments or total cost. Many borrowers do not fully understand this risk. Fixed rates provide stability, while variable rates create unpredictability. Understanding the type of interest is essential before borrowing. Stability helps you plan better. Uncertainty increases financial pressure. Always choose options that give you better control. Rate changes can silently increase your burden. Awareness protects you from unexpected costs. Many loans include hidden charges that are not clearly explained. These may include service fees, penalties, or administrative costs. Borrowers often discover these charges later. This creates confusion and frustration. Lack of transparency increases financial risk. Over time, hidden charges increase your total repayment. This reduces your trust and control. Asking questions and reading terms carefully is essential. Never assume that all costs are visible. Transparency is key to smart borrowing. Hidden costs turn simple loans into complex problems. Clarity protects your financial decisions. Always understand every detail before signing. Awareness reduces risk and improves control. Taking a personal loan without proper planning increases the risk of falling into a debt cycle. Many people borrow without understanding how they will repay. When repayment becomes difficult, they take another loan to manage it. This creates a cycle of increasing debt. Over time, this becomes difficult to escape. Poor planning leads to poor decisions. A clear repayment strategy is essential before borrowing. Planning reduces risk and improves control. It also helps you avoid unnecessary stress. Without a plan, loans become a burden instead of a solution. Structure creates better outcomes. Discipline prevents long-term financial damage. A personal loan does not just affect your present, it also impacts your future. A portion of your income is committed to repayments every month. This reduces your ability to save, invest, or take new opportunities. Over time, this limits your financial growth. You may miss chances because your money is already tied up. This creates long-term impact on your financial journey. Reducing loan burden increases your flexibility. More flexibility means more opportunities. Financial freedom depends on available resources. Loans reduce those resources. Understanding this helps you make better decisions. Less obligation creates more opportunity. More opportunity leads to growth. Personal loans are not always bad, but hidden costs make them dangerous. When you understand all charges, you gain control over your decisions. Awareness helps you avoid unnecessary expenses and mistakes. Smart borrowing is based on clarity, planning, and discipline. Over time, this approach protects your financial stability. Ignoring hidden costs leads to long-term problems. Every detail matters when taking a loan. Control comes from understanding, not assumption. The more you know, the better decisions you make. Financial strength comes from awareness and discipline. Protecting your money starts with understanding the true cost. Smart choices today create a stronger financial future.